Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, June 30th, 2017. So stocks, S&P 500 pulled back from all-time highs and kind of fell short of the triangle breakout that I will show on the charts. QQQ is under pressure still, and I think semiconductors are to blame for this. But small caps are actually doing quite well, and financials are strongly outperforming the general market. So overall, I think the stocks are still bullish. And we'll look at some of the sectors like retail, transportation, staples, utilities, and real estate. Also, I will actually show my trade that I did for utilities. I just recently closed it out. Bonds are still signaling that bull market in stocks is not over, and stocks outperformed bonds for the week. The dollar was under serious pressure this week, and the euro actually hit 52-week highs. So this is not a good sign for the dollar. However, gold did not take advantage of this, and GDX could go either way, and the downward break could be quite bad for gold. Oil bounced for the week. I think this is still a counter trend move, as I don't see a confirmation from energy sector, and natural gas is likely done correcting before the next swing higher resumes. Okay, let's start with S&P 500 ETF SPY. So last week we hit all-time highs, and basically pulling back since then. And we had a couple of really quite bearish candles here, and we turned quite volatile. So I can see a big red candle, gap up, move higher, another big red candle, another move, another gap, and move lower at the by the end of the session. So quite a bit of volatility. Where is this going? The mere fact that we're at fresh all-time highs, we're very close to all-time highs, signals that we're still in a bull market. Now, we're certainly overdue for some sort of a meaningful correction, let's say even 5% correction, but this volatility does not mean that we're going to get it. I mean, we had similar bouts of volatility, for example, here back in March, and then we just made fresh highs. So I would not look for a top-in I would not look for top-in pattern to go short. I would not short this chart. I would only look for a bottom-end pattern once the oversold condition is manifest. And I don't think we're oversold yet. I think we're still kind of in between. So I would just I have several positions myself in stocks. I have Dow Jones open, and I'm just sitting there and seeing which way things will go. But like I said, I would not short this chart. Here's S&P 500. Let me get rid of this pivot points for now. I wanted to show you what I mean. So a couple of weeks ago I pointed out this inside wick right there, and I thought we were breaking out to the outside, to the upside, and notice we had a black candle, but we didn't really kind of close above the range, and we sold off, and this week we sold off some more. So far this triangle consolidation did not resolve to the upside. We had similar triangle consolidations right here, and we had a clear resolution here in April. Same goes here in beginning of 2017. We had a triangle consolidation and a clear resolution. Right now we don't have a clear resolution to the upside. So if anything, we may have already failed this triangle pattern. And I mean, this candle also is not this week's candle is just not very decisive, I guess is the word. But overall, again, we're pretty bullish, I think. Strongest selling was in the QQQ, in the technology department, technology sectors. I mean, this advance was extremely steep from April to June. It was, definitely overdue for some sort of a pullback. We got the pullback in beginning of June here, a bounce, and this kind of looks like maybe a rising wedge, and now we definitely got the rising wedge break here a couple of days ago, and we moved lower. Now again, on Thursday here we moved strongly lower, but then by the end of the session the buyers stepped in. So technically we didn't move, be below the pivot point, and I want to show you what I mean. So here is a pivot point S1. We pierced through it, but we didn't close below it. So I still think that this is a decent support level. If we do close below this S1 here, next level of course to watch is 135.50, which is from the May lows. But then another good level to watch would be the S2, and by then we will definitely be oversold, and me personally will be looking to go long. By then we would be already correcting, let me see how much from the highs. It would be already around 7% correction. So that would be a sizable, decent pullback. Right now we're about 4% from the highs, but this is a more volatile ETF than S&P, and as a result, it moves more strongly. So I would be looking, if we get to S2, I would personally be looking to go long. Here's the QQQ on the weekly time frame, and here's a couple of bearish engulfing slash outside reversals. This here in May technically is not a bearish engulfing because the close on this hollow white candle was slightly higher than the real body of the next week's candle, but it is outside reversal because the entire range engulfs the previous range. So anyways, we have two more or less outside reversal here. Again, I wouldn't read too much into it because we had plenty of outside reversals in the past, for example right here in last September, and nothing happened. Another one here in last October with a small pullback and then just rallied to fresh highs. So yeah, we're definitely under pressure, but how much downside will this result in? That's a different story. And I still think that we're in a strong bull market, so I wouldn't necessarily look for shorting opportunities just yet. I think the strength, or rather the weakness in QQQ is caused quite, there's a lot of weaknesses in SMH in a semiconductors ETF. You can see it moved quite significantly lower from fresh highs that were set in June here. So this is about 9% move. This is a volatile ETF, so it's kind of like a normal pullback, and I think it's already oversold. So I would be personally looking to go long as well. Small caps IWM, quite a bit of IWM is actually a lot of financial firms in here, and notice that for the week IWM was in the plus versus other ETFs like SPY. It was in a strong minus, and QQQ was also in a strong minus. So IWM in the plus, and again I think this has been the reason is because there's a lot of financials in this ETF. So here's financials XLF, one of the best performing ETFs over the past few weeks. Notice this big move from the May lows. This was a successful retest. If we broke below these lows, it would be, I think, very bad sign, but we obviously didn't. We held here and we rallied towards multi-year highs. So financials are doing quite well, and for the week, one of the strongest performing sectors. Notice that for the week, XLF gained 3.2% versus the rest of the market, which lost about half a percentage point. XLY, consumer discretionary, Still under a little bit of pressure from the all-time highs, but I think we are already oversold, and I think the algorithms and the system traders are already stepping in and buying this ETF. XRT, now this one is not my favorite. The reason being it is a relatively weak sector. Notice the SCTR for XRT is very low. It's at 5.9 right now. So it's a relatively weak sector, and it is also an absolute weakness. Notice that we just hit 52-week lows and now we popped. So is this a sustainable rally? I have no idea, but what I know is that I don't like to be buying around 52-week lows, because normally securities that make 52-week lows, they continue to make 52-week lows. Is this a legitimate reversal and we will see a move higher? I have no idea again, but I know that this is a relatively weak and absolutely weak ETF, so I'm avoiding it right now. Industrials, one of the strongest ETFs right now, one of the strongest sector ETFs right now. So notice that this sell-off was relatively muted here. You know, whereas S&P went below the 50-day moving average, XLI, the industrial sector, did not, and I think it's being helped strongly by the transportation sector. Notice that transportation sector this week hit fresh all-time highs, and also for the week also gained for the week. So transportation is part of the industrial sector, and this is definitely helping that sector. Healthcare, you know, I think I pointed out last week that this was a semi-parabolic advance and definitely not sustainable, so we're getting a pullback. Very strong sector. Notice that SCTR is over 90 right now. So this pullback, I'll be watching it and see if there is eventually going to be a bottoming pattern, and we'll definitely be trading this at MasterCharts Trading. Same goes for XBI. Notice quite similar patterns to XLV. There's a lot of biotech in XLV. A surge, and now we're basically correcting. Also one of the best performing sectors right now, XBI. Industry groups, rather. Consumer staples were one of the first sectors to rally to fresh highs in the beginning of June, and now we're getting a significant pullback. Now, again, this is still very much a bullish chart. It's just a matter of finding its footing, and I think that we're ready to rally already. At the very least, a small bounce, you know, because it's definitely already oversold. Real estate, you know, we're approaching 52-week highs here, so this is again normal pullback. When we get to bonds, I'll show that bonds are pulling back, and I think this is also not helping real estate. Finally, utilities. Notice this very strong move. One of the first sectors to break the fresh highs. Now we put in what looks like a double top here at around 54.20 or so, and then pulled back. And notice that we gapped below the 50-day moving average. So I kept promising that I'm going to show my trade, which I opened in November, and here it is. So here's my trade, and this is what the trades look like if you sign up at MasterChartsTrading.com. I sent the alert, and I myself opened here on November 14th. And what I usually do is I set, you know, 3 targets, first, second, third targets based on average true range and risk coefficient, and obviously all 3 targets were met. And then we continued higher. I still kept the position open here, kept the position open. Finally, I closed it right there 2 days ago, you know, because looks like this move is over and we were getting some sort of a relatively deep pullback. Now again, utilities are in a uptrend, so I think that Once this pullback is over, we'll be looking for to re-enter on the long side yet again. But this was an overextended kind of, definitely overbought kind of condition here, and now we are relieving the overbought conditions. So to summarize, stocks are bullish, and most likely we will find footing and rally higher. But again, keep your mind open, and the opposite is also true. Let's move on to bonds, and here is junk bonds on the daily time frame, JNK. So all-time highs. This is an adjusted chart. In other words, the chart is adjusted for dividends. All-time highs here. Pullback. I was a little worried about this pullback. Now we moved higher, and so far so good. Looks like we're moving in the right direction for the stock market, because stocks and junk bonds are strongly correlated, and strength in junk bonds, I think, is still a good sign for the stock market. This is a weekly time frame for junk bonds. Notice that correlation is very high between junk bonds and stock market. This week, junk bonds gained about half a percentage point and are very close to all-time highs. So overall, I think this bodes well for the stock market. This is a relative chart, S&P 500 divided by TLT. So when we have S&P 500 outperforming, this chart is rising. When we have TLT outperforming, this chart is falling. Now notice this week, even though both S&P and TLT fell, TLT fell more. So on a relative basis, TLT underperformed. In other words, stocks outperformed. But on absolute basis, you can see that S&P 500 fell. So we'll see where this goes. But I think still bonds are. I still think are in a bull market because we are approaching all-time highs, which are up here. Anyways, TLT here. Lots of buying pressure, but now we have a significant sell-off here. Now, I still think this is a bullish chart. I promised I was going to show my trades for TLT, and here they are. So this is a TLT on a daily time frame. There are actually two trades here, and both turned out to be successful. Now, when you open a trade, you have no idea which one will be successful and which one will be a failure. So I assume all trades will be a failure until proven otherwise. That is why risk control is paramount. You have to bet a certain amount, and this is what I always do. I calculate the position based on risking $100. In other words, if your stop is hit, you will, hopefully lose no more than $100. So same thing here. I entered. So two trades here, March 15. Both went, March 15 and May 12th. Both went to second target. I usually take some money off the table sometime along the way. So here I did in April, and then again re-entered on the long side here May 12th on this gap up here. First target was met, and second target was met, and we moved quite significantly higher, but this selling, finally succumbed to selling. So right now I closed the position actually on Friday, and I'm waiting for a next setup to go long. Again, if you sign up at MasterChartsTrading.com, you will get similar alerts every time. Either I buy something or I just send an alert out. Weekly time frame for TLT. Notice this big red candlestick here, and it's possible that this is a bearish engulfing because we're at the top of the range. Well, for this, at the very least, swing higher, and it's possible that this is a bearish engulfing. Especially if we get any follow through to the downside, then this will be confirmed. Now we had similar big bearish engulfing patterns here, and eventually nothing happened. They just kind of moved lower a little bit and then continued higher. So I'm not sure we are in a bear market for bonds. I still think we're in a bull market for bonds, and maybe this bearish engulfing will account to something, and we will make a lower low here. Alternative scenarios that we don't, and we just hold here and continue higher. As far as investment grade bonds, this one is even stronger than TLT. Notice this kind of very shallow pullback here in April, May, and then continuation higher. And again, a relatively shallow pullback. This is a far less volatile ETF than TLT, and sometimes less volatility is good because you don't get stopped out as often as for more volatile ETFs. LQD all-time highs here actually this week, so I still think that this is a bullish chart, clearly. Let's move on to Forex, the Forex universe. So this is US dollar on the daily time frame. We have now second support break here. So this one here in just this week, we moved below last November lows. So right now it's short term definitely in a downtrend. Long term, I can still argue that we're in an uptrend for the US dollar. But now we moved below November lows from last year, and this is not a good sign. The biggest, I think, issue is that euro has broken out. Let me go on the weekly chart first. Has broken out, and these are now 52-week highs. Now, 52-week highs are quite bullish. Notice that these are now 52-week highs. So I would be treating euro now as in a bull market, and almost by extension, the US dollar would be in a bear market, because this is about 50% euro. US dollar index is about 50% euro, and the rest are British pound, Japanese yen, Swiss franc, Canadian dollar, and Swedish krona. But the important thing is the euro. I think if euro is going to be moving higher, then dollar index would be most likely under pressure. So this looks like a genuine breakout. In fact, I removed this question mark here. I think now we are in a bull market for euro. Of course, a very big test of strength in euro would be coming up relatively shortly if we get to 1.17. Now this will be important once we get to gold, because gold and dollar move in the opposite direction. British pound also is following euro higher, and this one is somewhat weaker than euro, but it had a really good week this week. So maybe we are finally done with the bear market and British pound. Now, versus Japanese yen, it's the opposite. US dollar actually gained this week over 1%, so it's a little strange because dollar is losing versus other currencies but gaining versus the yen. So overall, I think this chart could have been worse was it not for the yen, because yen moved lower rather, versus the dollar. So again, overall, I could still make a case that this is a bullish chart because we went to multi-year highs and we're just kind of pulling back. Maybe this is a cup of some sort. But now that we broke below November lows, I'm having harder and harder time making that case. And let's just look at how far are we away from 52-week lows. We're not that far away from 52-week lows for the US dollar. Okay, so now that we're done with Forex, let's look at gold. Gold and dollar usually move in opposite direction. So here's a correlation coefficient between dollar and gold, and notice that normally we're negative, but occasionally we're going to positive territory where dollar and gold move in the same direction. And this is one of those weird episodes right now when we are gold and dollar are moving in the same direction, and we're moving down together with the dollar. Let's look at GLD. Here what I wanted to show is that we basically came up to resistance, and this resistance was reaffirmed for now in the 124, 125 area, and we pulled back. Now I think gold could still come up here. Well, hopefully it will come up here and at the very least retest this level here. Now, if it gets rejected here, I think we could see a substantial move lower, and in that case I will question my assumption that we're in a bull market for gold. But it hasn't happened yet, and we're kind of moving, somewhat down to slightly to sideways. But I still think that we could come up here into 124 and retest this level sometime relatively soon. Here's the weekly time frame, fourth week in a row that we're losing. Does it mean that we're going, as a reversal to the mean kind of thing? Does it mean that we're going to stop here and move higher? Not necessarily, because notice that we had sometimes 1, 2, 3, 4, 5, 6, 7 weeks in a row of downward pressure. So anything is possible. I mean, to me this chart looks pretty bullish, but this double top cannot be ignored. It's possible that this is indeed a double top. GDX, nothing really happened in this ETF. I don't see any major divergences, either bullish or bearish, between the market breadth and index. Bullish percent index kind of worries me because it's a little bit on the low side. It's only 28%, and we did come down from the 60% mark here. So it's not ideal, but it's not deathly either. So hopefully we will resolve this and move higher. Here's what I wanted to show is that we had an inside week this week. So this week's entire range is within last week's entire range, and now this is kind of like a triangle consolidation. Hopefully we will break out to the upside. Now if we do get this breakout to the upside, then we could easily re-challenge around levels of about 25.70, 25.80. Now the opposite is also true, and if we reach, if we break this triangle consolidation to the downside, we could be in the world of pain, especially if we take out these levels around 20.89 and continue lower. Reason being is that we're going to be approaching, this is going to be 52-week lows, and I think that if we take out, break below previous lows here in May, we could easily hit 52-week lows, and again, this is not a good sign. So far it hasn't happened, so hopefully we will resolve to the upside. Finally, here is GDX on a daily time frame. Some of my proprietary market breadth indicators for gold miners. So this indicator here, percentage of stocks on the buy signal, became very oversold and then rallied. Now we again pulled back significantly. As I pointed out last week that no indicator is infallible, and this one is no exception. That's why I kind of, this is a secondary indicator to me. I usually look at price action first, but sometimes they're useful. And here's another one. This intermediate term breadth momentum oscillator for GDX. Notice that we are still oversold. and we kind of became a little bit more oversold here as well. So far we have not, there was not a lot of buying pressure, only 3 days worth of buying pressure. So to summarize, it is kind of weird right now, weird time period where gold gold is moving in the lockstep with dollar, and we'll see which one will be the correct one. West Texas Intermediate light crude oil in a daily time frame. So pretty obviously here we had notice this red candlestick right there, followed by this white candlestick and another white candlestick. So I said this is a triangle consolidation, and if we break to the downside, that would mean significantly more downside pressure. Notice the exact opposite has happened, and we broke to the upside, and we had 1, 2, 3, 4, 5, 6, 7 relatively strong days. Now, I still think that oil is bearish, so to me this looks like a counter trend move, and a bigger trend is down. So we will be looking to again get short and find, basically I'll be looking for signs of failure, something along the lines of strong bearish candlesticks. On the weekly time frame, this is in my opinion, bearish security. We had a support break here in March of this year, and since then we've been making lower lows and lower highs. Notice that XLE, energy sector, even though oil bounced significantly, notice this relatively strong bounce here. XLE had a relatively weak bounce this week. It continued to, hit 52-week lows and multi-year lows and advanced decline line. So this still looks like a basically a counter trend move. Here's XLE on the weekly time frame, and I put XLE in the top part here and West Texas in the lower part here. So notice here we had this is about 7% move for the week for oil, but energy ETF moved 0.84%. So it feels like energy companies are not confirming the move higher. Maybe we can look at XOP, a little bit stronger, 2.9%, and maybe XES, and this one 3%. So, maybe they're attempting to bottom here, but notice that this is a 52-week lows here for XES. XLE did not yet hit 52-week lows, so there's a little bit of hope for this one. But I think if oil decides to continue lower, and I am almost sure we will see a failure relatively soon, then XLE will follow. And here's natural gas on a daily time frame. So notice that last week we had a big gap down here, and then moved lower, but then we kind of stopped falling and had a gap up here on Monday and moved higher. So overall, very volatile, obviously. So one of those ETFs that you want to be trading very carefully, and if you're a new trader, possibly not at all. This takes a lot of nerves, I guess, out of you. If you're a new trader, trade something easier. For example, utilities. They are not as crazy volatile as natural gas. But in any case, we do trade at MasterChartsTrading.com, and looks like we had a gap up, so this is a good sign. I still think this is a bullish chart, and I would not short it yet. Anyways, this is a weekly time frame. If indeed we are going to fail here and continue lower to around $2.50, $2.60, and then break below, then we could have a head and shoulders kind of pattern. And if that's indeed head and shoulders, we can move significantly lower. It has not happened yet, and I still think that we could move higher from here. In fact, we are trading it alongside MasterChartsTrading.com. Alright, that's it for this week's recap. If you like what you're hearing, please hit the like button. If you have any comments, comment below. And of course, if you found this video valuable, please share it with others. Thanks for watching and have another great trading week. Bye-bye. I wanted to introduce you to my service. Please go to MasterChartsTrading.com and then click on Trade Alert Services. So right now I'm introducing a 6 months and a 12 months membership, so you get a nice discount versus the monthly membership option. So when you sign up, you get lots of members only content. Of course, there's lots of videos. You see my open positions and the recent recommendations, or rather recent alerts of what was sent out. There's also a bunch of actionable ideas that you can take a look at. Very important is risk control in my trading, and risk control is achieved by sizing your position appropriately. So I have an Excel spreadsheet that you can download for free that you could use to size your positions. And I usually, when I send an alert out, then I usually include the sample position size in the alert itself. Of course, you get several videos on risk controls, and these are extremely important, I think, to basically survival as a trader. There's several videos on trading selection, selection of the securities to trade, and some general ideas on trading. There's also a bunch of videos on psychology of trading that are also quite important, because it is important to keep your mind in the right place, as this is quite a stressful endeavor. I also have another section here that has to do with trend identification, because my subscribers asked me repeatedly if I could record videos to help them identify the trend. Which way should be selling? Should they be buying the chart? Should they be shorting this chart? And so I recorded a bunch of videos to help you identify the trends. Also a couple of other videos to help you lower your risk and identify less volatile funds. There's also a section on foreign stock opportunities within the daily email and the daily blog post. Dividend aristocrat stocks, we also trade them, but they are traded on a longer term time frame, and you could simply it's almost like a buy and hold, but in a sense of with a you can find a good opportunity in an uptrend in high quality dividend aristocrat dividend payer stocks. So also on daily basis I provide an email and market recap, but on weekly basis I also provide a members only email that describes my positions and describes the recent alerts and the recent dividend aristocrat changes as well. So give it a chance. Sign up for 3 weeks. There's a free trial with every single membership. If you already signed up, then you can renew here at also decent prices for 6 months, 12 months, and monthly membership. All right, thanks for listening, and I'll hope to see you in the membership section soon.